super common question I get, Paul, what stock should I be buying right now? So before I get into that answer in this video, I want you to remember one thing. If you're new to this channel, I'm Paul. I've been teaching value investing for over 10 years and the last 3 years on YouTube. Having a YouTube channel in and of itself does not make me or anyone else in this world an expert in investing. In fact, might be quite the opposite. However, I guarantee you that if you watch this video plus 4 or 5 others, you'll walk away understanding money and investing a lot more, and you'll walk away saying, okay, this guy understands it and has a process. Whether you agree with me or not is a totally different story, but you won't be able to deny that I understand how this stuff works. So what should you be buying right now? Well, let me give you an example here. Let's say there's a company and hypothetically it has 0 debt. I was going to make this very, very simple. And it has 5 years left in business. And here's the profit by year. Okay? It has $1. It has $1. It has $2. It has $3. And then it has $1. What are you willing to pay me for this stream of cash flow? Okay? So it's going to be $1, $2, $4, $7, $8 of cash flow in the next 5 years. Would you pay me $10 for it? Now, your automatic answer should be no. Why would I pay you $10 for something that's going to give me $8 in the next 10 years, in the next 5 years? 100% correct. Love it, and I'm glad you thought that way. Would you pay me $2 for it? Well, would you pay $2 to get $8 back in the next 5 years? That's quadrupling your money. I would think that's a pretty good investment. The point is, there is somewhere in between 0 and infinity that you'd be willing to pay for this company. You need to decide based on how secure this is and other factors, qualitative and quantitative, what's this worth? So when somebody asks me, Paul, what stock should I be buying right now? In a very basic form, my answer is very simple. What stocks have a good long-term prospect of price versus value? My goal is to buy when the public's perception of the company drives the stock price down way below its long-term value. Remember, being a value investor is hard because when stocks are flying high and you're saying they're too overpriced, people think you're wrong. And when stocks are all the way down low because the story is terrible, the stock sucks, people look at you and say, why are you buying it? You're wrong. But there is a happy medium, and this is what you should be doing. It's a simple thing called average. I want you to dollar cost average into long-term ETFs as your go-to. Why is that? Well, guys, if you've watched my channel before, you've seen this chart 1,000 times. This is the value of the stock market over long periods of time. But this is actually how the price goes. Okay? Go look at history. Stock prices go up, stock prices go down. But over a long period of time, they go up. And your job is to buy every day, every month, every quarter, every year, whatever it is, the same consistent way. It's called dollar cost averaging. You're going to overpay sometimes, you're going to underpay sometimes. But on average, you're going to pay this. And you're going to beat over 90% of actively managed Harvard MBA losers who run those mutual funds that charge you a ton of fees. And you're going to crush it just by matching the market. So if you look at our YouTube channel, youtube.com/everythingmoney, we have 170,000 subscribers. Look at videos, all these videos, individual companies, different topics. There are over 1,800 videos here that we have made where we explain our process for looking at companies. My process is very simple. The present value of all future cash flow is an investment. My goal is to buy a future stream of cash flow that I can determine what it's going to be with reasonable accuracy for as little as I can. Now, does that mean that once I find a company, it's going to go straight up in price? Guys, in the history of my buying stocks over the last 22 years, 25 years, twice have I ever bought a stock at its absolute low at the time. Twice. And I've bought hundreds and hundreds of stocks. And twice I bought a stock at the literal absolute low. That's it. So stop trying to think it's going to happen. I don't even think it's going to happen. In fact, the 2 times it did happen to me, I was pissed. I wanted the stock to go down. And that's the mentality I want you to be as an investor. So why was I pissed? Guys, my goal is to buy great companies that are mispriced as the stock falls. The stocks probably will fall because in order for them to get cheap enough that they become a good investment, it means that public perception has changed about the company. But remember, it's not necessarily true. Just because people believe this doesn't make it true. My goal is to strip away all the emotion, or I should say this, as much emotion as I can, because we're all emotional. I'm emotional too. And when a stock of mine goes down 40%, I wonder, am I wrong here? I could be wrong. So as compared to other channels out there are buying all the hype stock at the high numbers, saying this is a no-brainer, and then when it falls 80%, they sit there and sell. For a guy like me, I'm not buying the hype stocks at the highs. I'm waiting until they fall. And if I start a position and it falls further, I do two things. First, I go, am I wrong? And I reevaluate the position. I ask other people's opinions. Hey, what do you think about this company? I go look at what are the pros and cons of the business? What's the bull case? What's the bear case? If my thesis is still in place, I buy more shares. I use a stock falling as a let me go reassess and make sure my thesis is still in place. Other people look at a stock falling and saying, oh my God, I'm wrong. But guess what? Go look at every great value investor in history. They made their money by buying stocks as they were low, not when they were high. It's easy to sit there and say you're a value investor, but a true value investor gets excited like I do when stocks fall. If you go to my Instagram account, on there, go back to the COVID crash. There are literally pictures of me kissing the TV screen when I see stocks down 7, 8, 9%. I absolutely would love for stocks to fall in half today. And if you think I'm a sociopath for that, watch the channel, because when it does fall, I will be the guy saying, this is a good time to buy. And everybody else will be saying, oh my God, look at all the garbage out there. This is terrible. That's the point. What happens in the media is, including YouTube, is when people don't understand how a stock price goes up, when the stock price is going down, they find whatever news to drag out that justifies what's going on. Same when it's going up. They pick whatever news justifies the stock going up. I do not. I do not follow the herd. In fact, the joke I tell people is I still question if the sky is blue because everybody believes the sky is blue. And I'm naturally inclined to be a believer in doing the opposite of what everybody else does. So if you want to be like the other 99%, I'm not the channel for you. I'm okay with that. But if you like the fact that I sit there and look at companies based on a future stream of cash flow and not just a ticker symbol, that when I'm buying a stock, I'm buying a piece of a business, you need to continue watching our videos. Watch those 4 or 5 other videos. So back to the original question, what stocks should you buy today? First off, I believe 99% of people should dollar cost average into low cost ETFs month in, month out without worrying about it. However, if you feel like you can take 10 or 20% of your money and buy individual stocks, this is what I recommend you doing. Join our community, everythingmoney.com, and I have my watch list. What I do is I go through 75, 80 stocks that I like, companies that I like, and I determine what price I want to buy them at. Not the price, not justifying today's price. What price do I want to buy them at? And the reason being is when they do hit that price, I'll get an email notification and a phone. Learn the process now. I know you want to buy individual stocks. I get that. But you know what you're not going to like? If the stock goes down and you don't understand why. I want you to get to the point where when a stock goes down, you're going like this, like other people in our community. They're high-fiving going, this is awesome. I get to buy more shares of the company I love. And don't just buy 2 or 3 companies. My personal opinion is I want to own 20 to 40 individual companies. You'll have time to do that. This is not a race. It's a marathon. Get there. I thought marathons are races too, but it's not a speed race. It's a marathon. You'll get there. Warren Buffett always said that the reason he and Charlie Munger did so well was they knew they would be very rich. They weren't in a rush to do it. It's amazing to me that every great value investor, when they threw off and pushed away immediate gratification, made more money down the road. So what stocks do I need to buy? Go watch our next video. You have to watch the next video on the 8-pillar process and how to go look at individual companies using that 8-pillar process. Thank you very much, and please subscribe to the channel. But all of these together, guys, all of these tell me a story. What does it tell me about Microsoft? It's expensive. Now, obviously, if you watch our videos, the stock analyzer tool, which is phenomenal,